Hello and welcome everyone to our first panel discussion of the day, which addresses the question, honestly, why invest in ASEAN and why Malaysia? This session will be moderated by Mr. Anwar Jumabhoy, keynote speaker, facilitator and coach, Profitability Southeast Asia, Malaysia, who will then introduce our speakers for the session. Over to you, Anwar.
Thank you very much. Welcome, guys. We're going to keep it a little informal in keeping with the spirit of working from home. And so I'm very pleased to have Khailee from 500 Startups, whom we all know from Says.com days with Joel. We also have Tom, who's set up in Malaysia with Gobi Ventures, and Saemin, who is with Rakuten Ventures, and of course, Vikram Bharati, who's based in Singapore, and I guess we have 3 investors, and we have Vikram, the backpacker, who now spends his time funneling deals to investors. So maybe I can start with a question on ASEAN, right? So how active are you guys in ASEAN? And in particular, which countries are you active in? And perhaps you could give some reasons why you pick the country. You know, is it the deal, the country, or the entrepreneur? So maybe Tom, since you've got a lot of large investments in Malaysia, maybe Tom, we start with you.
Yeah, thanks. Thanks for having me, and it's again great to be part of this panel with a lot of old friends. Yeah, Gobi, we love Southeast Asia. We've already invested in over 60 companies here in Southeast Asia, and we're looking to do more. We've already set up 7 funds, 4 single country funds and 3 regional funds, and we're looking to do more. My expectation is that the world's attention, given the US-China trade, strategic competition, actually will put an even greater spotlight on Southeast Asia. So we're looking to do a lot more. I think, just like all my fellow panelists will agree, Indonesia has been very exciting. It's the most obvious investment destination because it's the biggest. But I actually think there's a lot of underappreciated markets here in Southeast Asia. At Gobi, we really like the Philippines a lot. Obviously, we think Vietnam's also very interesting. So we see those as other opportunities. But again, the key part has been sort of what I call this SIM axis: Singapore, Indonesia, Malaysia. And I think that continues to attract a lot of attention. And I think Malaysia is perfectly positioned to take advantage of that.
Tom, before we get to the others, maybe I could ask a follow-up question. You mentioned, Philippines and Vietnam, and in respect, or even Indonesia, in respect of Malaysia and Singapore, these are very large unbanked markets. Is that a point of difference for you? Does it make, or is it a driver?
Oh yeah, absolutely. We see these very large young populations. It reminds me of what we saw in China almost 20 years ago, and what we saw happen in Indonesia 10 years ago. So again, I think for all of us here, it's almost like the movie. It's the same movie playing itself out again. And for guys like us who have the pattern recognition, you want to get in there earlier than others, before the big institutional waves of capital start sweeping in from, I think, the US and China.
And hopefully it's not the replay of the Kodak moment, right? And Kodak moved their whole plant to China thinking that,
Hopefully not, yeah.
Khailee, you've been super active. Maybe you could say a few words about your involvement in the region. What are you doing, and what drives you to invest in the different parts?
Yeah, I've been radioactive. You know what I mean? It's been about since 2014 when I first transited from my entrepreneur life into venture capital. I think having the 500 Startups platform step into Southeast Asia has been quite a ride. We also have kind of like multiple funds for targeting single country, whether it be Thailand or Vietnam, but also regional coverage funds called 500 Durians, which also kind of looks into Malaysia, Indonesia, and Singapore. I tend to call it like the golden triangle, because I think property developers kind of like that too. So we've done, in combination of all the funds, we've done over 300 companies. We've been early backers of some larger ones like Bukalapak, Grab, Carousel, and so on and so forth. Malaysia-wise, we've done over 40 companies here. And I think that in terms of Southeast, like to your question about Southeast Asia itself, like we do think that the Mekong region is also shaping up in an interesting way. Yeah, so and seeing how some of our Thai partners are actually looking at Cambodia, Laos, and Myanmar, and we've made some investments there, and that's also shaping up in a very interesting way. But the big picture is that we think that Southeast Asia is not just for I mean, there'll be Malaysian founders building companies in Indonesia. There'll be like Thai founders building something in Singapore. Like, you know what I mean? Like we live in such a seamless, borderless world right now, COVID withstanding, right? So, yeah. So I think that our perspective in Southeast Asia is to continue investing more in this region, and try to be ahead of the curve.
Cool. Saemin, what's your involvement in the region and your investments?
Yeah, I mean, I actually have a lot of lineage and parallels with Khailee. I mean, we came up almost in the same generation of investing, early stage to mid stage investing. And, for me, I've always looked at Southeast Asia as a corridor for safe harbor, and with unprecedented, socioeconomic and political kind of currents, this kind of safe harbor is only extrapolated and further amplified itself. For us, we've always been bullish on Southeast Asia, specifically for Singapore, which is a little bit inverse of other investment partners. We have so much exposure, but also so much invested in the success of Singaporean founders. I think we have over about $85 million over the past 6 years invested in Singapore founders and Singapore corps alone. So I think definitely if you look at technology-driven companies, that will only begin to emphasize itself. We've also been very interested in markets like Indonesia, in Philippines, and also Thailand. So that interest will continue to drive itself. We really haven't increased our velocity of investments. We do anywhere between 3 to 4 investments, but specifically globally. So we might get around the corner to doing another Southeast Asia investment soon, but we've already done with a company called Tamakan in Malaysia. So we're very excited about some of the up and coming companies in the region.
Yes, I know Tamakan well. I mean, one of my ex-staff, I think, went to work for them. You mentioned Singapore. And in terms of investments, how does it work? Do the different regions just pitch and you decide, or do you say, okay, this 2 quarters we're going to look at a deal in a specific country?
Gotcha. That's a great question. For us, we move in many ways more like a hedge fund. We're very thematically driven, and we find out what themes make sense for what regions. And then we tune the thesis and the business model that works towards those countries and those regions themselves. We look at what companies can work very well in specific regions of the US, for example, and then we try to look at how that translates into Southeast Asia. A very good example of this is when we were looking at computer vision companies on the commerce and content side in the US for a good year. And one of the biggest deficits with all the founders and all the teams in the US was that their cost base was completely out of whack. They simply thought that if they could get the smartest people in the room without a product idea, without a business plan that they could get somewhere and create alpha. We disagree with that thesis, and we looked at companies all around the world. And we ended up investing in a company in Singapore called vSense, which is a computer vision company that has really dominated the market for computer vision for e-commerce. So just try to look at and try to commit to that apples to apples vision has really yielded us good returns. And also we found great founders in that process.
Very cool. And Vikram, coming to you, I mean, what is your exposure in the region besides, I think, the 2 years in 2015 and 16 where you visited 85 cities, is that right?
That's right. So yeah, Anwar, I'm not an investor like these esteemed panelists on here, but I do have some exposure to investing. I actually did a stint in venture capital in the year 2016 and actually did 2 investments in Malaysia. And I think, Khailee, you know them well. One was the Bloom This from Malaysia, the flower e-commerce company, and what was Shali's company, which is the real estate
Urban Metri.
The Urban Metri. So
Yep.
I do have some interest and understanding of the Malaysian market, but overall I'm an operator. I'm currently building a hospitality company, which is in 10 countries, the US, Europe, and Asia. And it's a hospitality concept that's marrying universities. So all our spaces are micro campuses, and they're also investment houses. a lot of investment opportunities come through all our spaces around the world, and we funnel them to different funds in our ecosystem. So we see a lot of interesting people doing interesting things with crazy ideas, and we try to make some sense of that.
It's quite fascinating for me, having observed the tech scene for so many years, to see how the splice and dice continues to work today, where segments get smaller, people get smarter and more focused, right? So, another question really is, when you look at ASEAN and you look at Malaysia, are there mindset differences in the founders that you see? I mean, Khailee mentioned that you don't have to be an Indonesian to be a founder of an Indonesian company. And I think Rakuten, you mentioned the company. I think there are English founders, right?
The VSense one that I mentioned before was Singaporean founders, and their dominance as a Singapore. But to your question about how is the mindset changed, I think every single Southeast Asian founder has really gotten a crash course in building up and scaling a business in the past 3 or 4 years. If you were to look at what founders knew 4 years ago and what founders knew now, irrespective of stage or actually maturity of the company, completely different. The founders right now have so much more acumen in terms of what they've been doing, what they could be doing better. They're so much more up to date on what to track and what not to track. I think that kind of school of hard knocks over the past 3 or 4 years have really hyper matured how founders need to build and how founders actually tune their business models. It's a really great thing to see, something that has taken a lot longer in the US, but of course, things work in different cycles in Southeast Asia.
I'll come back to that difference in a bit, but Khailee, your views on the mindset, and there's always the issue that I've been hearing for years is investors want profitability or they want growth, and a lot of startups tell me that they want to invest for growth, but they only give you enough money that you have to go for profitability.
If you don't mind, I actually think one important way to frame a lot of the discussion we have about what investors want, right? Because there's you've got asset allocators like global pensions institutions, and those folks are in the terminal they call LPs, limited partners. So they give money to the fund managers, the GPs like Tom and Saemin, and the Draper network VCs, right, which becomes part of it. So then those VCs will have the mandate, right? They'll design a mandate for the institutional investors, and then as a GP, we'll have to tell our LPs why ASEAN, and here's our strategy to really make money for you. That's why you got to give money to us, right? And then we'll take this money and then we'll look for the entrepreneurs who fit this mandate. So I think a lot of the panels that we're on usually tackles the conversation of getting how to get VCs, what investors want, right? What VCs want to actually invest in startups. But the conversation that needs to be had is that how can we get asset allocators to decide to even dedicate a 0.1% of their portfolio to Southeast Asia, or 0.01% into venture as an asset class. Now that conversation is really important. So I'm going to stop there just to see if the other panelists have stuff to say about this, and Anwar, whether you felt that this was something we could talk about.
So Tom, to you, the question to you as a follow-up is, how do you pitch Southeast Asia to the LPs, to the GPs? How do you pitch Southeast Asia?
Well, I think one, back to Khailee's point, and he makes a great one. I think part of this discussion is what can governments kind of do, right, to spur on investment into venture capital. And again, I think that's got to be supported by, the local institutional investors, right? We can talk about VC all we want and how great it is, but I think the fact of the matter is, even today, when we're pitching Southeast Asia, we're pitching a lot of it to foreign LPs.
Yes.
And again, when I'm out there pitching, the first thing a sophisticated foreign LP is going to ask is, are the local investors, are they eating their own cooking?
Yeah.
And so you may be saying, what does that mean? Well, it's if Southeast Asia is such a great story, how come there's no local institutional participation?
Yeah.
One of the advantages I think Singapore has, right? Saemin, and we can talk about this, is
Yeah.
they put their money where their mouth is,
Yeah.
right? So if you're pitching in Indonesia, Indonesia doesn't even have a sovereign wealth fund,
Yeah.
right? The families aren't participating. You've got to get foreign capital to come in. It's a tougher story to sell.
Yeah.
But if you were to ask me, yeah, the easy things you're pitching, demographics are fantastic, young population, early technology adoption cycle, ability to leapfrog, right? Everybody's seen it. It happened in China. It happened in India, right? That's not a difficult story to sell. But the question is, where's the support coming from?
Yes.
Yep.
So
Right?
Tom, if you or the other panelists, if you were to rank the ASEAN countries rather, 10 countries, which of the countries are eating their own food?
Singapore, number one.
Singapore number one.
They've invested in themselves. Like they put their, I mean, they're willing to back their own entrepreneurs and willing to back their own VCs. And they're so aggressive, they're willing to take VCs from around the world and back the hell out of them so they become Singaporean VCs, right? So I think that they're like a way ahead of the pack, like light years ahead.
Does anybody
And it
come
just has to
second?
be opposite.
Yeah.
If I can just jump in
Vikram,
here.
go ahead.
So
Please, Vikram, please.
I'm running a business in pretty much all the Southeast Asian countries. So we have operations, right? We have payroll, we have legal entities, we have the whole gambit of running a business, and including Singapore. And I've got to tell you, I've been very impressed with how the Singaporean government has given support to our small business here in Singapore compared to what's happened in Indonesia or Myanmar or India or any of the countries we're operating in. Singapore has really, really helped us sort of get through this COVID period. And I think that's part of eating your own lunch. You're investing in your own companies in your countries.
Saemin, you want to add to that?
These guys say too many smart things, and I don't want to egg on the other Southeast Asian countries. But yes, I mean, Singapore is by far the leader. I mean, for goodness sake, Israel reverse comes back to learn from Singapore in terms of how aggressive Singapore does innovation investments. So there's a reason why I'm in Singapore. And at the same time, I think in many ways, this is to Khailee's point. It's not only Singapore. Singapore actually invests aggressively in other countries in Southeast Asia. So they become the proxy mother LP for all of these great funds. So I think definitely a lot of the countries can learn from a lot of the superstructures that Singapore has done. I would say if there is a second that comes to Singapore, people actually don't recognize this as Southeast Asia, but maybe Taiwan does a lot of really great efforts into aligning and getting third-party LPs and third-party investors involved. Also, their versioning high-tech kind of semiconductor industry really helps with that money and LP liquidity bleeding into Southeast Asia inversely. So I think those two countries have done a really good job in doing consistently their route to innovation.
Khailee, go ahead.
Anwar, you don't mind, right? Like, I think one thread amongst all the comments on this trajectory of thinking is that it's not so much like the way to think about it is not so much like, oh, Singapore is ahead of everybody else. What can we do to be ahead of Singapore? It's not like that. I think that what the important thing in context of Malaysia, and to Tom's point, is that you just got to have a ticket to the game.
Correct.
Right now, we don't have a ticket to the game because our own institutions are not investing in our own markets in the very asset class that is the primary driver of innovation for the country. You want a high earning economy, you want IR 4.0, you want your entrepreneurs to succeed. Well, put your money there, right? And some, of course, may talk about Pajana as a way, as a pool of money. I think that's a very good start. But again, foreign VCs and local VCs, they have to pitch global LPs, and then they want to know whether the local institutions are actually putting money in or not. And currently, some of them have, and I think, just to be fair to the local institutions as well, some of them have, and I think that we've been, 500 startups. We have multiple funds in multiple countries all over the world. We invest in 76 countries, right? So for me, like, I don't want this to be about, oh, there's a couple of like Malaysian folks wanting to get more money, so they're trying to, make some propaganda. It's not about that. I think it's just that, like, I think Tom, myself, like, we're global citizens, and we just happen to choose Malaysia. Tom, because I think Tom moved his whole family here, man. You know what I mean? Like, for me, at least, like, I adopted a family here. Do you know what I mean? I was born here, right? So, I didn't have to make such a big shift like Tom has. But like, we have to just take a global perspective. We've been part of so many of these panels, right? And you want honestly is part of the title, and you just want to be honest. Like, I don't want to jump on the same panel and just say the same thing again, right? Let's just get to the heart of it.
So Khailee, the question is that the local institutions, and as to put in Tom's words, that there are not enough people eating their own lunch. Now, there've been a bunch of very successful entrepreneurs in all these markets, right? In Indonesia, in Singapore, in Malaysia. Have these guys tapped into, and are they a source of funding?
Sorry, can you?
The successful entrepreneurs who have made exits and who have gone on to make money, are they putting money back into new startups?
Some of them are. I mean, definitely a lot of the tech founders who had exits, and some even pre-exit, they've been active in angel investing. So, and then in each country there are like multiple names. And myself, that's how I got into venture, right? After my exits, I just started angel investing. That's how I got in. So that's a very natural thing. But if you want like a step change for a country, yes, you're going to need large amounts of capital. And again, I just want to say this, and I cannot make this any more clear, that like the local institutions have been taking steps. Like they have been getting involved and they have been backing VCs, but I think that to Tom's point, if you want to see some change in rankings, if you will, right, we're gonna have to do a lot more than that.
So if we park that thought aside for the moment, that you do need a large chunk of money to show that you are eating your own lunch. The other two parameters, right? The quality of the entrepreneur, the size of the market, etc. How do those play in terms of your investment thesis? And why, again, I mean, my perception of Southeast Asia is, I tell some of the founders, the advantage that Southeast Asian founders have is they build many to sell to many, whereas the Chinese and the Americans build one to sell to many, because they produce one, they have a large homogeneous market. Whereas the Southeast Asian founders are able to work small markets and to Saemin's point, get the economics to work. So
I think, and sorry, I know I'm taking a lot of mic time from my fellow panelists over here, but I just want to really nip it in the bud over here. Like different business models perpetuate, you know what I mean? We can't generalize that, because if you're like a SaaS company, for example, or you're like a tech-centric company with global customers, like Saemin invested in VSense. VSense serving like global customers from the get-go. That's the design of the company. But if you started something like, let's say if you do Damakan is like a local company, because there's like nuts and bolts of actual food being delivered to actual human beings, right? So different business models actually perpetuate for different outcomes. So, and when you think about investing in Malaysia, it's not really a market. We're like, hey, we got like 30 million people. I mean, like that's one part of the conversation. But again, like you invest in Southeast Asia, Malaysian founders had a long history of building ASEAN companies, from Mark Chang days, Patrick Grove days, all the way, all the way till today. With Faye,
you got Grab, you got Kok Leong with IP88, Merchant Trade. There are a bunch of companies.
Yeah. So it's really ASEAN first, right? And those are more for local. So you got to put like the local first business models in one bucket, and then you got the global first business models in another bucket. And we got a ton of names and examples in there as well that you can cite. So again, sorry, my fellow panelists.
Tom, you want to jump into this conversation?
Yeah, no, we're co-investors with Rakuten on VSense, and Oliver, I think, is a great example of a local Singaporean using Singapore as a base for a global market. Maybe the question, just to reframe it, is what do we love about Malaysian entrepreneurs? I think they are as good as anybody we've seen, not only in ASEAN but around the world. And I think Malaysian entrepreneurs are very entrepreneurial from day one. They have the ability to manage across cultures, across religions, across languages. When I first moved here in 2015, I was struck just by how multilingual Malaysian entrepreneurs are. And if you look at a lot of the successful startups, they actually originated in Malaysia, but have been adopted and claimed by other countries. So again, I think that the quality of talent here in Malaysia is as good as any country in Southeast Asia. But again, a lot of them end up, going elsewhere, greener pastures.
So,
Anwar.
Yes, go ahead, Vikram. Yeah.
I recently just saw a statistic which I thought was interesting. So if you look at the alumni of successful companies from Southeast Asia, like Grab, Lazada, Gojek, a lot of the rocket internet companies. The number of new companies being founded by the alumni of these companies, it's tremendous. I mean, the alumni of Facebook in Southeast Asia, there's about 54 companies being built right now. There's about 246 companies being built in Southeast Asia from alumni of Google, and there's about 261 from Lazada. So I think venture investing in Southeast Asia is very new. Historically, if you look at it, it's a very new phenomenon. And the factory is just starting to being built. And the factory is being built because some successful companies will have alumni. They will leave the company, start. And so the golden age of Southeast Asia is going to be the next 10 years, if you look at it from a macro perspective as well, because 10 years ago in China, you look at the spending power of majority of the population, that golden age of disposable income is yet to come, and it's going to be the next 10 years. So I think why ASEAN, it's because I feel the day for ASEAN hasn't quite arrived yet. It is
excellent point.
Yeah, I think Nick Nash also talks a lot about how the macro factors are there, right? The unicorns are there, the spending is there. We've gone past the first phase of building the internet, so the opportunities are there. And it's good to see that ASEAN also has produced its PayPal mafia that have gone out and built a lot of successful companies. So if we come back to the issue of we talk about money as being the big driver to get Malaysia or any ASEAN country up the road, and big money comes from government, and big money might come from private investors. What stops government from taking a step?
At least when you look at the governmental interactions that I've had in the past 6 or 7 years, it's just the alienness of investing. Because when a lot of governments invest, they expect there's infrastructure, there's sunk costs, there's something securitizable that goes into the platform. Look, I put money like $2 billion into an asphalt consortium. I expect a road that I can see every single day, right? And I think that overall aspect really hasn't transferred well into investing in the quote unquote digital economy per se. And to Vikram's point, it's because we just started. And I think in many ways, we're in this first precipice of really productive credit consumption, and then that leading to higher productivity in terms of income increases and also being able to develop a better economy. And more of these services and products that we consume every day being developed as at a more homegrown level. I mean, I make a really funny example of why didn't a Grab of Thailand ever come up, right? There were, but they were really in many ways choked out or very still small scale. So I think those things are still very, very much in flight. But at the same time, going back to the governmental discussion points, I think the concept really hasn't been I guess, stabilized and calcified in the overall structure of regulatory and kind of governmental support structures.
I mean, you would imagine that in Indonesia, with Nadiem joining the government, that would be a change in thinking, right? Tom, any thoughts on why governments are reluctant to invest when they're not physical hard assets?
Yeah, maybe I give just two levels. One on what you were just saying, but a more practical point is I think government has good intention. Everybody knows that they need to build out the digital infrastructure. So there's a high level, directionally, everybody wants to put more money, right, to support entrepreneurs, to invest into digital infrastructure. The issue comes when government has the mandate, but to actually execute that among the institutions. When you have people on the investment panels or ICs, and they're all from traditional industries, and they don't understand. And then you're trying to, so there are people at the working level that are very enthusiastic, younger, that really want to push it through. But then as soon as they hit the investment panels or investment committees, it's like running into a wall. So the rhetoric says one thing, the execution says another. And I think
do we just have to wait for the old guys to die off?
Well, no, I don't know, but I mean, part of it is, you may say one thing, but you also have to execute. And when you execute, you have to really create the conditions. So I meet a lot of great institutions here in Malaysia, Indonesia, Philippines. They all know what's coming, right? We've seen this movie. But then the government, they have a lot of considerations, and I know it's not easy as well. But then the people who have to actually make the decisions, they're concerned about, well, I have to take less risk. And making an investment in a commercial building is something I can touch and feel, and nobody will blame me if that's a bad investment. And especially we've seen the whole concept of risk has changed during COVID-19. If I were to ask you right now, is it better to invest in a mall, or is it better to invest in like online collaboration software? Unfortunately, a lot of the government appointees, and again, people with long records of public service, great people, they just don't, maybe they don't understand it yet because they can't touch and feel the online collaboration software company. They don't know what that is. A commercial building, easy to understand. I see it, you know?
Yeah.
So sometimes I
And
think there's a mismatch there.
Sorry,
Yeah.
Saemin, yeah.
Yeah, I mean, to give to further support Tom's point, you know, when Korea started this in South Korea, when they started this whole creative economy support structure for funding venture capital companies, this is like 5-6 years ago. Some of these investment term sheets were lack of a better word, hilarious. They would make the founders liable for the actual investment amount. And the investment return timeline will be like 3 years. Yes. So like the VCs would look at this and they would laugh their bellies off. But now the actual kind of creative economy cycle has gone through their own maturation. So now these term sheets and the partnerships that they do with VC firms are much more kind of level-headed.
No, it's very true. I mean, when I was at MAFCAP, I remember sitting down with a founder, and he was coming for a second round of money. And I said, "Have you read your term sheet and your investment documents?" He said, "Yeah." I said, "I suggest you read it again, because, you know, how much of the company do you own?" And he said, "I own a majority." I said, "No, you own 5% because there's a clawback, and you didn't meet your numbers." So,
but you know, like Saemin, the introduction of like Korea into the conversation is actually excellent, because I think Korea came a long way, but look where it is now. And just in tech, we're not even talking about like, you know, like everything else. We're just in tech. Like we don't have to actually sing the story of why ASEAN and why Malaysia, because Korean capital has been a steady part of the venture capital ecosystem, not just from an LP standpoint, but also on like a direct investing standpoint. Like they get it. They're just not shouting about it, but they get it. So so the question then becomes if Singapore is investing in ASEAN and Singapore, and Korea is investing in ASEAN, and Taiwan is also investing in ASEAN already, like when will Malaysia invest more in ASEAN, right?
Vikram, so we have to ask you, when are you going to open your Malaysian hotel?
Well, okay, so it's a really good question, because I think it ties a lot of the conversation together. We have been trying to expand into Malaysia for a while, and it's not from a lack of trying, but it's been difficult. And it's really, you know, COVID has not helped, of course, but I always ask myself, why don't we have a space in Penang, which I think can become a digital nomad hub of Malaysia, similar to how Bali is, similar to how Chiang Mai is. And why are people not trying to really build, you know, the infrastructure to attract these folks into Penang? And it's just been difficult for us. But we want to. Hopefully next year we will set up shop in Malaysia, and I'm very bullish in about Malaysia, and specifically in ASEAN. Anwar, I think there's so much opportunity, and I know everyone here is a venture investor investing in, you know, mainly technology, so it's a different type of investments. But in terms of generally investing in ASEAN, I think the opportunity is in every category. Maybe there's 1 or 2 categories that have matured, right? Like telecom infrastructure, that's very much matured, or you know, television. But even data centers in the bottom of the pyramid, you look at all the opportunity sets. There's just so much opportunity for new companies to come in and build traditional businesses too. I'm a big advocate of building brands, and these could be shoe brands, food brands, these could be furniture brands. I mean, traditional businesses. But ASEAN doesn't really have international global brands in traditional businesses. And I think that's a huge opportunity set. And, you know, brands have never been in the thought process of business operators, because ASEAN has mainly been a trading economy. But as the new generation comes in and they realize you can create awesome brands through content marketing and
Yes.
community building. These types of low-hanging fruit of opportunity in Malaysia or Philippines, it's huge.
I mean, the two brands obviously that
Excellent.
everybody knows are AirAsia and Grab, and so their success stories built on the back of a physical product, in that sense. Khailee,
I think-
your thoughts on building out in the ASEAN
Yeah.
region, the importance of a brand.
Yeah, I think to bring a lot of our conversation together and some practical output of benefit is to see what the Indonesian government's done with its startups, because not everyone has like the deep pockets of Singapore, right? And then so Indonesia also had to play a catch-up game, but they rallied around their top unicorns. They got this Nexticorn program. They put a lot of backing behind it to surface who the next unicorns are going to be. When they find a unicorn like Bukalapak, their birthday party, the president and 7 ministers attend their birthday party. Right? You know what I mean? It's like they really go hands-on to say, you are gonna be capturing the mind, the imagination, and the fascination of Indonesians for generations to come. We want you to win. So I would urge the Malaysian government, not because like Tom and I are both co-invested in Karsem, but Karsem's doing a great job, V-shaped recovery. They're doing all kinds of interesting things to be a fundamental piece of the economy. And if, let's say, the government says, hey, Karsem, you got a shot at becoming a unicorn, let me give you everything I got for you to become a unicorn. You know, that way we don't need to.
It comes back to
we
Tom.
don't need to spend too much money. We don't need to spend too much money doing like 100 things. You know, like zoom in on who our heroes are and support it. Back then, you got one badminton player, Rashid Siddiq. Okay, let's just make him the world number one. You know, let's do it with Karsem, or pick some other company that you think there's a shot. Right? Pick 5 of them.
Yep. And in a way, you know, some of the organizations are doing that, but it comes also down to the question of how do you pick the winner and who has responsibility for picking the winners, right? Saemin, what happens in your markets when your portfolio companies come to you and, you know, they want a large chunk of money? Because we've seen the big rounds. We've seen the big rounds by Ninja, by Grab, you know, who are really, these are massive rounds.
I first cry all night because Rakuten Venture isn't that large, but at the same time, our founders are lucky enough to really be able to invite really great, bigger, larger next stage investors to those next stages. A very good example of this is what Khailee mentioned, where Naver actually put out a big check and a big partnership with Carousel, so that not only that, they could actually develop joint ventures in markets like Thailand and Taiwan to give Carousel asymmetrical access to those user bases. It's amazing business that they're going to build out. If you were to think about in the most pragmatic sense, how do venture capitalists have more liquidity to put into the economy, put into founders, and also work with governments? You know, in the most, you know, it's actually pretty easy to look at what the bigger players are doing. Khailee and I were having this a discussion in the lounge, where a lot of the bigger guys like TPG to KKR, they are coming into growth equity and venture capital assets. They have been for the past, you know, several years. And in many ways, in the most restricted sense, you know, venture capitalists should also seriously consider increasing their skill sets, touching more asset classes to be able to actually talk to more and more local LPs who are indeed comfortable with deploying assets that are more liquid or that are more familiar. So those things could be definitely what could be the next venture capitalist 4.0, 5.0. I strongly believe in the next, you know, 5 or 8 years, VCs will look nothing like what VCs look right now. We're going to have to evolve. We're going to have to compete and partner much more competitively against the private equity players and the hedge funds of the world.
Yep.
We have a couple of minutes left, so let me just go around the table. Vikram, Tom, Saemin, and we'll end with Khailee because I know Kailee's pitch is coming. Vikram, ASEAN, some closing thoughts on, you know, how do you make ASEAN more relevant or Malaysia more relevant for the startup scene?
Well, for me, the statistics that's very interesting and exciting is that in the year 2028, there's going to be 110 million people in ASEAN that are from the ages of 15 to 24. And that's going to be 70% of what China is today. It's going to be larger than the US. I mean, it's going to be just a massive skill share that's going to come and mind share that's coming. And I think this is a starting point. We're going to see amazing things happen, amazing ideas come to fruition.
Cool. Tom?
Yeah, I think the real discussion today, one of the key topics is, you know, what are the especially Malaysia, how do we compete? I think there's a model there. Saemin was saying Singapore is doing some good things. I think Malaysia has every chance. But again, it really comes down to strategy. I mean, so much can be accomplished, like we saw in the Korea example. But you know, Singapore right now is like the bully on the block, right? They're like the New York Yankees. I mean, these guys, you know, they want to win. They're willing to.
I thought it was the LA Lakers.
Oh, the Lakers, and they're willing to spend. And I think Khailee makes a great point. Is Malaysia is producing so many great companies, but then it's almost like they make the jump, and making the jump to like the EPL, the Premier League is like the feeling is that's what Singapore is, right? For every country in Southeast Asia, the feeling is if I want to make that jump, I got to get to Singapore, and Singapore is great at creating that. But what I'm saying is, the anomaly isn't that Singapore is the hub. The anomaly is that the other countries aren't doing it.
Cool. Saemin?
Yeah, I mean, everything that the panelists said, I completely agree with. I think, and just going back to the macroeconomic trends, I think there's a report out in 20 to 30 years, there's going to be 3 developed markets. So 30,000+ GDP per capita markets popping up. This is an amazing place to be. And that's why you have so much liquidity pouring into these markets as we speak. I'm very bullish, and that's the reason why our VC firm is based in Singapore while investing globally. And because of that, I think definitely we will continue to invest a lot in the market and try to meet the best founders possible.
Cool. Khailee?
Yeah. I think the last word I have is that we gotta stretch. You know, we wanna stretch a little bit in the way we think and what we do. Right, to Saemin's earlier point about the evolution of VC, like 500, we've got different instruments, different things we're trying out because we think it's more market practical. But how it relates to governments and how it relates to founders as well. Like I'm personally trying to stretch. I try to stretch all the time. Like I've never been stuck in Malaysia for more than 15 days in the past few years of my life, right? And so now that I'm here for 9 months, I'm stretching. I realize that, like, you know, if I want to contribute. Like I need to learn the language of governments. I need to learn the language of policymakers, and I need to learn what people care about here. And I think for a lot of the entrepreneurs in a portfolio, they care about building a country too. They care about building economy and society, but you can't speak the same tech language and startup language. You got to learn like a new language, and you got to stretch. And the same thing for the governments. You got to stretch the startup language, the language of global asset allocators. You got to stretch into their world, right? So if we all can stretch a little, then maybe we can reach and hold hands and collaborate, right? But we got to stretch.
Cool. Thank you very much. It's been an interesting discussion, and I think it was wide ranging, but we got to the main points, which is, you know, what governments can do. You need to eat at your own table. Huge opportunity macro for Southeast Asia with, you know, the growing spending class, and entrepreneurs, like entrepreneurship is everywhere. So it's not separated by geography. So thanks very much. I'm going to hand back to the moderator or the MC, because I think we've run out of time. So thank you for joining us, and I look forward to speaking to you again. And I look forward to seeing ASEAN become on the world stage, right?
And Vikram, I'll get you to Malaysia, man. I'm going to text you after this, man. I'm going to text you. Come to my house. All right.
All right, thank you to our esteemed panelists for your thought-provoking session, for sharing with us so openly and honestly on your experiences, your insights, and your expertise. And of course, Anwar, for the remarkable job moderating this session as well. I believe that it was truly insightful, especially for investors who are looking to expand or invest into the ASEAN region or Malaysia for that matter. And of course, I believe that governments do play a pivotal role in supporting the growth of the digital agenda in a country. And with that being said, I believe that our next session will be equally as compelling as we dive further to have a better understanding on one of the world's most digitally advanced society and nation, where our next speaker hails from, Estonia. Stay tuned and we'll see you at the next session.